This is an estimation of dollar Japanese yen on 4-hour time frame chart. I will commence my analysis from this bottom here until the most recent point on the market right now. I set the indicator at this initial point, and I see that I am in a bullish trend indicated by the bullish trend line in green color here. Also I see the bullish exhaustion line, bearish exhaustion line, and equilibrium line. So what we got, the market went up here, check exactly the equilibrium, and found liquidity. This is the liquidity on the market. Then dropped to the support line and broke here. This is a bullish sign. This is the bullish break of the equilibrium. So the market gave us a bullish sign for the forthcoming bullish movement up. After the break here, the market dropped to collect liquidity for the forthcoming trend. The liquidity can be collected at the trend line, at the equilibrium line, or even at the bearish exhaustion line. Depends on how powerful is the market. So here we are opening our longs. Can be opened here on the equilibrium, can be opened also at the trend line, and can be opened on the bearish exhaustion line. It is visible that we got no volume here in this break, so I'm not expecting the liquidity retracement to be that powerful. If we got volume on below the equilibrium line, most probably the market will retrace to the bearish exhaustion line and will look for liquidity here in this area. So in our case we got no volume, and the market retraced here very close to the deviation line, and this is a very good place where we can open our longs. Trend proceed further up to this top. Before that the market broke the exhaustion line, and after that reach this top. Let's proceed further. After that market dropped, and what we got here, the market dropped below the equilibrium, and we got break of our bullish trend. Our bullish trend commenced from our initial point to the top. After that we got a break here, and the trend changed to bearish. Let me repeat what condition must be met in order to know that the trend already is over. So the first condition is the market must reach the exhaustion line, and the second condition is to break the equilibrium line. If we already in our analysis see that these both conditions are met, then we are sure that this is a break on the other side of the market. Why the first condition, to reach the exhaustion line, is a must? This is simple and logical. So for our movement from the bottom to here, we got some volume inside. Every volume on the market must be used for something. This is the fuel of the market. So this fuel must be used reaching some goal, some target, reaching some exhaustion. This is the point where this volume must be used. If not used, this volume is it will stay inside the market, and something must happen with this volume. Must be used. This volume must be used. So in our case, this volume is used because we already reached the exhaustion line or the target. It is up to you how you will consider it. We already reached some goal on this market, and after this goal we drop below the equilibrium. The breaching the equilibrium is our second condition. Why? Because trading over the equilibrium means we are trading in the bullish volume area, while trading below it we are trading in the bearish volume. That's why this is the second condition. Okay, so our bullish trend commences here up to this top. After that we got a break below the equilibrium and our trend changed. So we must re-estimate the market again, and our analysis will commence from this top here. After our bullish trend we got a bearish break and bearish market. So I will change the purple line here at this top. Let me zoom in a bit. So what we got here? The market dropped below the equilibrium line and reached the exhaustion line. In some cases it is possible, if the market is powerful, not to give a retrace where you can open position. You can open at equilibrium, you can open at trend line, you can open at the deviation line, or even at the bullish exhaustion line here. But where exactly, we don't know. So it is a subject to money management and consideration of the market. So the market dropped here to the exhaustion line, checked again the equilibrium, dropped again on the bearish exhaustion line, and finally break. This is a break. So our bearish trend was from this top to this bottom. The place where you can open your short positions was at this candle here, when the market touched the equilibrium to the bottom. Here at the equilibrium the market collected the liquidity and dropped again. Once again, when the market is checking the equilibrium, you can open another position, another short here, until the most current bottom. So this is a break. In this respect, I will change the position of the vertical line again in order to estimate my next movement. Here what happened? The market went up, checked the equilibrium. Again, look what happened here. the market checked the liquidity and dropped again. We are looking for a signal that the market can trade on the other side. The market checked here but didn't give us this signal and dropped again. Anyhow, the bullish trend line is still green. The trend line is still bullish. Here at this place we received the signal we waited for. This is our bullish break of the equilibrium. Then the market dropped down to look for liquidity where we can open our orders. You can see the market dropped to the bearish deviation. This is the lowest point of the market, and we open our longs here to the breaking to the place where the market reached the bullish exhaustion line, or to the actual top. We don't know where the actual top will be, so this is subject to further estimation. But anyhow, our longs are in force from this bottom to this top. After that we got the next break. The market already reached the bullish exhaustion, and after that dropped below the equilibrium line. So our conditions 1 and 2 are already met, and I am sure that this is a break. So I will re-estimate again, moving the purple line from this top. What we got here? This is our top of the bearish trend. The market dropped, and here we got a break. This is a bearish break. This is a signal that the market should proceed further down. My analysis is on 4 hours time frame chart. Always the analysis is subjective. This is very important to be understand. The analysis is relative. Every analysis is in some context of the market. When I analyze 4-hour time frame chart, I am seeing what is happening only here. In order to have some wider view on the market, it is good idea always to check one time frame higher. And I will show you right now. I will change to daily. Let me use a clean chart. Another one. Let me estimate the daily chart just to see where right now I am with my current trend estimation based on lower time frame. This is a multi-time frame analysis, but not full multi-time frame. I mean, I do not estimate every time frame, but one time frame higher, just to have a better view on the market, what is going on. Okay, this is my bottom. Here the market checked the equilibrium, found some liquidity, and gave me bullish signal. Then the market corrected to find liquidity down. Let me check the deviation. Okay, very good position here at this place. It is excellent for opening a long, and after that the trend proceeded further up to the exhaustion, to the bullish exhaustion line. Here we got check of liquidity, which is very important this place. I will insert a line here, and we'll go to 4 hour here at this place, and right now I will check 4 hour time frame chart. Here is our example. We are at this point. This is our daily chart. Our bottom, the market checked the liquidity here, dropped, and what happened here? The market gave us on daily chart a signal, a bullish signal that can trade on the bullish side. Let me delete all these arrows. This is the daily chart. Okay. The market break the equilibrium. After that, what happened? Drop down to collect the liquidity and proceed further up. This is on the daily chart. When I change to the 4 hours, my current estimation is from this top. This is our daily break. You can see here something very important. The market on 4 hour chart dropped below the equilibrium, and we got a bearish trend line, but didn't reach the exhaustion, the bearish exhaustion line. And this is because on the daily, the market already gave bullish signal on higher time frame. daily is higher than the 4 hours. So what is happening on the daily chart is quite important, and this point here of the market is the grabbing of the liquidity on daily. That's why it is possible in this case the market not to reach the exhaustion line of 4-hour time frame chart, because the 4-hour time frame chart is not the most important right now on the market. So I will comply with what I see on the daily chart and will long here at this place. Then I will proceed further with my 4-hour analysis. What I got? The market reached the equilibrium and immediately, very powerful, gave me a bullish signal here. Now the 4-hour chart is acting the same way like the daily chart. Both are bullish. That's why the market didn't drop significantly to chase liquidity here. After the signal, the market proceeded up. Anyhow, what I looked for, I received it after that. The market dropped below the equilibrium, and here are the next longs. First long is here, second long is here. After that we got a break again. Here is our break. The market reached the exhaustion and dropped below the equilibrium. I will change again the position of the purple line. Okay. What I got here? It is a signal. It is a bearish signal because the market broke the equilibrium line and show us that it's possible to trade in the bearish area. But let me check again what happened on the daily chart. Here at this place is the liquidity of the daily action. Where the market is collecting the liquidity. Okay, back to 4 hours. This is my signal. And what is this? This is our shorts. We can short from here or from here, or even from the bullish exhaustion line. To where? To the liquidity of the daily chart, which is here. You can see how precise is this. So the next, this is our bottom, and the next estimation is from this bottom. Here, next example, market is going up, and this is a signal, bullish signal over the equilibrium. Market corrected down and the trend proceed further up. So here this is a good example where it's visible that it's possible to the market to check a liquidity even down to the bearish exhaustion line. This is the lowest liquidity. All this here and here, this is our long positions to this top. After that we got a break, re-estimation again. Here is the next place, which is which must be checked again with the daily. What we got? The market here on daily reached the exhaustion line. This is a top, and then what is this? Here our place. This is liquidity check on daily. So this is our target on 4 hours time frame. This is the end of this is where we must look for our targets, where we must check to collect what we already earned. The market reached this place, and after that proceed further up. Okay, next bullish trend. This is a bullish break. Market drop to check liquidity. We open longs, and our longs are until here. After that we got a break. This is a bearish break, so I will re-estimate again from this top. To the most current place right now. Here we got bearish break, the exhaustion line still not reached. A reaction up to collect liquidity, and waiting a drop down to the bearish volume exhaustion. Of course must be compared with the daily also. If something happened on the daily, we should comply with it. So generally this is the idea of Meravith, and give one common vision, how to analyze the market with the indicator. Of course there are some other examples that will be shown in the other videos. Thank you for watching, and bye.